Hey guys, this is Mark coming to you guys with a monster update today. We are just now through the first week of 2018, which is setting up to be a monster year. But the purpose of this update is I want to recap 2017, talk about 2017, and I want to talk about what we're looking forward to in 2018. Now, before we get into that, I just want to say congratulations. Congratulations to you for recognizing this opportunity and getting involved. I know it probably sounds like cryptocurrencies are everywhere, Bitcoin's being talked about, but the fact is that really hardly anybody is actually gotten involved in this. You know, there's a big difference between awareness and action, right? So like, you know, everybody knows they should diet and exercise, but hardly anybody does. So people are now becoming aware of Bitcoin, but the truth is hardly anybody has taken action on it. I mean, really, globally, it's like less than 1% of the people have gotten involved. So although you're in it and you're probably a little bit obsessed with it like I am, it sounds like it's everywhere. But the truth is that hardly anybody's gotten involved. So congratulations to you for recognizing the opportunity and getting in really at the ground floor. I mean, I believe we're just getting into the ground floor. So you're in before that. Now, 2017 was a monster year for cryptocurrencies, and you know, it dates back. Obviously, Bitcoin's been around since 2010. You know, there's been other currencies that have been out for a couple of years, but to show you guys, you know, kind of where we're at. I mean, just in 2017 alone, the market was amazing, right? And before I tell you how amazing it was, I want to put some perspective into this. So in 2017, we saw the stock market, I'm talking about, you know, the NASDAQ, the New York Stock Exchange, etc. We saw the stocks have like maybe a record year, like maybe the best year ever. I mean, the stock market is at an all-time high right now. It's actually crazy, and it's kind of scary how high it is. And so as monster of a year, as record-breaking as it was, the stock market is up 35% for the year, for the entire year, for 12 months, 35%. All right, so I wanted to give you guys that just to put a little bit of perspective. So in cryptocurrencies, I'm going to talk about the entire market. So I'm talking about Bitcoin, Ethereum, Litecoin, all of them combined, the market, the entire market. And so we're going to talk about that, but just talking about Bitcoin, which didn't do as good as the overall market, but just with Bitcoin alone, in 2017, it went up 1,300%, 1,300%. So the stock market had its best year ever, and it did 35. Bitcoin, which was not even the best performing asset, did 1,300%. I mean, it outperformed the Dow Jones, the NASDAQ, you know, long-term 20-year treasuries, gold, all the emerging markets, junk bonds, everything. It outperformed everything, even despite the U.S. Stock market having its best year ever. So, you know, just to kind of give you guys a little bit of history, we'll go back to 2016. Now, 2016 was also a pretty good year. The market cap, again, that's all the coins combined. The market cap in January 1 of 2016 was 7 billion, and it ended the year at 17 billion. So that was January 1 of 2017. So from January 1, 16 to January 1, 17, it went from 7 to 17. That was a profit, or I'm sorry, a gain of 149%, about 150%. In 2017, we started off at the 17 billion, and we ended on December 31st, 2017, a week ago, at 565. So from 17 to 565, just unbelievable. That's a 3,000% gain. 3,000% gain. So Bitcoin did 1,300, which is amazing when the stock market did 35. But the overall market went up over 3,000% last year, 3 times. So if you would have just done average gains, you know, $1,000 turns into $3,000, right? Amazing. Now, Bitcoin started the year at 949, ended the year at 14,500. That was, like I said, 1,300% return. Ethereum, though, which is, you know, one of the largest coins out there, smoked it. I mean, it did. It started the year at $8, ended the year at 754. So that was a 9,000 325% gain, 9,000% gain for Ethereum. Neo, which is in our portfolio, it's our best performing coin that we're in. It started the year at, I don't know where it started the year, but we entered the position at 17 cents. And it ended the year, December 31st, at $75, a 44,000% gain. 44,000%, right? The stock market had its best year ever at 35. Vertcoin, we got in at 3.5 cents, into the year at 640. That was a 18,000% gain. Those were our two best in the portfolio for the year. You know, as you guys know, we have our long-term portfolio, and then we have like our kind of fast mover section. In our long-term portfolio, we have 16 coins active right now. The cumulative gains, when you add all the gains up together, was 99,000%. 99,000%. 10 of the 16 coins are up over 1,000%. Amazing, 1,000%. 10 of the 16. So that's kind of a recap of 2017 and kind of what we saw. But I wanted to talk more about 2017 and just kind of the maturing of the market. So I've really seen the maturing of the market, and there was some big themes that we kind of tracked when I look back on the year, kind of what I saw. So I think, you know, the first half of 2017 really was all about the explosion of Ethereum. As we talked about, it was a 9,000% return. Ethereum just did amazing. And really the first half of the year was the explosion of Ethereum. And so for you guys that don't really know the difference, so Bitcoin is like a money, like a currency. You know, all these different coins that we're tracking are doing something different, right? Decentralized currency like Bitcoin, decentralized storage, internet security, decentralized social networking, right? They're all doing something different. Ethereum is not money, it's not Bitcoin. What it is it's a platform that other blockchain companies can build on. So for example, if you have an iPhone, it uses an iOS operating system, and there's an app store. There's thousands of apps, and those apps, you know, are short for applications, and those apps are designed to run on the iOS platform. And so that's what you know, so those app developers, they're not going to go create their own iOS and try and compete with Apple. They build an application that just goes onto the iOS. And so that's what Ethereum is. Ethereum is like an iOS. It's a platform that allows blockchain companies to build their applications on top of them. And so with the explosion of Ethereum, we saw the explosion of the altcoins. So as many as like 80% of all new blockchain applications and coins were being launched on the Ethereum platform. So as Ethereum blew up, we saw the explosion of the altcoins. They blew up, the explosion of ICOs, and then what we know is ERC20 coins. So any blockchain company that's built on Ethereum uses a coin that's ERC20 compliant, meaning it's compliant with all the other coins or on the Ethereum platform. And so that was really dominated the first half of the year. Then I think what we saw the rise of the Korean exchanges. You know, Korea has been a massive force in the global market, taking up about 60% of the market share. And so we saw really a rise of the Korean exchanges, the volume, you know, pumping coins that get listed into Korea and stuff like that. Then what we saw going into August was we saw Bitcoin fork. So we'd kind of heard this theme about Bitcoin and the scaling debate, the war for the scaling debate. And then in August we had the fork, which created Bitcoin Cash. And then, you know, so that second half of the year, we started really seeing a lot of FUD being spread around Bitcoin and Bitcoin Cash. We really saw a war going on where, you know, potentially Bitcoin Cash has tried to sabotage Bitcoin to crash that market. And what that's done is it's created a lot of pressure onto Bitcoin's fees and scaling. And so, like I said, that was really what led up to this fork. And now it's only made that problem worse. And then, you know, at the end of the year, we really saw just a huge rally of the altcoins. You know, marketers are coming out, pumping these coins, and we really saw a rally in the altcoins. So Those were the kind of themes that we saw in 2017, and we kind of saw how the altcoins surged and Bitcoin kind of reasserted its dominance, and then the altcoins kind of came back. What I also noticed was that, in the first half of the year, the entire market kind of moved together. So when Bitcoin went up, the alts went up, and vice versa. And then we started to see the market actually moving separately, where Bitcoin and the altcoins were moving separately of each other. And that's a sign of the market maturing. Now, I want to get into some predictions for 2018, but before I do that, I want to talk about 3 stages of growth for any asset. All right, so we can go back and we can study history to help kind of predict the future, right? Kind of predict where things are going. Now, history doesn't always repeat itself exactly, but it's very similar. And so it's super important to understand history to help us understand the future. And so there's always 3 stages of any new asset or new technology. And we can see this played out over and over. And just a couple quick examples are, in the early 1900s, we had the automobile. And the automobile was a new technology. Henry Ford created the first automobile and the first assembly line. And that was a new technology. And what happened is, we had the first one. We had guys in their garages that were kind of working on cars, trying to get it going. We had the first one. Then we had a mass rush into the auto manufacturing industry. And within years, there were 150 auto manufacturers. Then what happened is it crashed. 95% of those auto manufacturers went out of business, and 3 emerged: Chrysler, Ford, and GM. Now, obviously, we know that the market rebounded, and now there's 100 plus auto manufacturers again. We can also see the same thing with the internet boom back in the 90s. So in the early 90s, 93, 94, it was hobbyists and tinkerers again. It was guys in their garage, and they were trying to get their computer hooked up to another computer, and they're working on sending information, right? Then what happened in 1995, really it was with Netscape. If you guys remember, Netscape was really the first time that we had Wall Street, what we call institutional money. I'm talking the hundreds of billions of dollars get into the market. So with Netscape, they got in, it blew up, they made a bunch of money, and then Wall Street, venture capital, institutional money came in really hard. And from 95 till about 98, they just dumped in heavy. Then what happens? So we have the hobbyist tinkers, we have institutional money. The third stage is when the public gets in. So right now, you're in, congratulations to that, but most people aren't. If you went to the most crowded mall in your town, you talked to 100 people and said, do you own a cryptocurrency? Most of them would look at you like you're crazy because they have no idea what that is. So, and then, like I said, there's awareness but not adoption. So then now people are becoming aware of it, but they're not adopting it yet. And so everyone's going to remain very skeptical. We're going to see all the institution money come in, hundreds of billions, trillions of dollars will flow in. Then the average public will start getting in. And of course, unfortunately for them, they get in too late. So again, back to the internet analogy, right? In the early 90s, we had the hobbyist tinkerers. 95, Wall Street jumped in till about 98. 99, we saw the average public come in. They rode that from 99 to 2000, made a lot of money. And then at 2000, it crashed almost 90%. The internet market crashed almost 90% from 2000 to 2001. Now, that wasn't the end, as you all know. The internet, technology, the stocks, it's all rebounded. The Amazons, the Googles, they all made it. But 95% of the companies did not. They went out of business. Now, what happens is most people, they get in at the top, it drops, 90%, and they sell. And they sell at a loss. They lost 90% of their money. Now, if they would have managed to get the right positions open and they would have held on to those positions, of course it rebounded. And so from the peak in 2000, it took about 5 or 6 years to get back up to the next peak, but most people couldn't hold on. So anyway, I'm telling you these 3 stages of market growth and adoption, because if we can understand history, then we can apply it to the future. And so we don't know what's going to happen as far as timing in this market, but we do know what's going to happen as far as the way the market is going to progress, because we've studied history. And so timing it is hard, but looking for the signs is important. It's kind of like, I don't know how long it takes to drive over there, but when I see the signs, I'll know. So it's kind of like that, right? And so it's important to understand those stages so we know where we're at in that cycle, and we also know where that top is going to be. Because although I'm prepared to sit through that 5-year winter, as probably you are, I don't want to just take that loss. I don't want to see all my money lose out. I want to be able to get a lot of my profits out before that happens. And so these are the signs. We're studying them, and we're going to let you know as they come about. Now, predictions for 2018. All right, here we go. So there's a lot of predictions. Everyone's got opinions. You know, there's some famous people out there. There's a billionaire investor, Mike Novogratz, and he is pretty outspoken. He's got quite a following. He started one of the first funds to invest into Bitcoin and cryptocurrencies. He's a billionaire. He's claiming that by the end of this year, by the end of 2018, we are going to see Bitcoin up to $50,000 by the end of this year. We have James Altucher and John McAfee, who maybe you've heard of, maybe you haven't, pretty big vocal outspoken people here. They're claiming Bitcoin will be at 1 million by 2020, which is insane. Now, I'm thinking more along like Mike Novogratz. Maybe he's right. I think, you know, we'll see it 35,000 this year, maybe by the middle of this year even. You know, so that's kind of where I'm thinking that we'll see it fall in line. Now, 2018 has already started off massive. So as of today, we're just through the first week, and the entire market cap has gone up to 830 billion. Remember, it was about 500 at December 31st. So it's gone up to 830 billion as of this morning. That was a 46% gain in a week. So stock market did 35% in a year. This did 46% in a week. Now, the market kind of had a crash this morning before I had time to put this video together, and dropped all the way down to 700 billion, which is a 15% drop. It's volatile. It happens quickly. It's already rebounding. It's up about 5% to about 750 billion right now. Now, that's where we're at. It's already off to a bang. Now, what are we going to be looking for in 2018? So if you go back to those 3 stages, we're past the hobbyist tinkers, and now we're getting into the institutional phase. So we're just into phase 2, and we're going to see phase 2 really start to build out this year. What we're going to see is you know, we already saw futures come in. So the CBOE, the CME launched their futures. That's kind of the first step of institutional money coming in. But we're going to see NASDAQ is coming in with futures. And then we're going to see the ETFs started. So those are exchange traded funds, and that makes it very, very easy for anybody to invest into this market. We're also going to see scaling, Bitcoin scaling. So as I said, right, Bitcoin scaling debate raged all through 2017. I don't believe it's that big of a something to be talked about. I actually don't believe that Bitcoin needs to scale. I believe that Bitcoin is a store of value. I believe that investors are parking their money to get out of their local currencies. Now, you know, in a lot of countries, they're not as fortunate as the United States, and their currencies inflate really, really fast. So people are ditching their local currency for Bitcoin. People here, instead of putting all their money in gold for savings, they're also putting money in Bitcoin. So it's a store of value. And I've been investing into gold for over a decade, maybe longer, probably about 15 years. And I own gold now. And obviously Bitcoin's outperforming it, but I still own gold. I like to be diversified across asset classes. But I've never one time ever thought about buying anything with my gold. I just would never do that. I'm definitely not going to carry my gold around and try and buy Starbucks coffee with it. I'm not going to do that. And so I don't think Bitcoin needs to be that. There's plenty of other currencies that are out there that are meant to be used as daily currencies that do it much better, much faster, much cheaper, Litecoin being one of them. So I think all the news about Bitcoin scaling isn't really all it's cracked up to be. But I think we're going to see some solutions. So I think just in the near future, we're going to see some major developments come out with Bitcoin, that they're going to be able to scale it faster and cheaper. And that's going to be massive. We have, you know, Coinbase, which is the number one place where US-based people, US-based residents buy their Bitcoin. They've been signing up hundreds of thousands of people a day. Hundreds of thousands of people a day. Their app in their app store is the number one app in the world. I mean, it's just insane. And they can only buy Bitcoin, Ethereum, and Litecoin when they come in. And so everybody's coming in and they're buying Bitcoin. I think we're going to see a mass flow of that money going into the altcoins. That's something that we're going to be looking at. I believe that the market cap is going to be in the trillions. Now, we just hit 500 billion at the end of the year. Today, at 700 billion, it's not as far of a long shot, but we'll see it in the trillions, and I'm going to get to exactly how many trillions here in a little bit. I think we're also going to see a lot of projects actually launching. So we've been investing into coins and companies of the future. They have these roadmaps, which is their milestones of completion, and we are going to see them completing them. We're going to see them actually launching these, and that's going to be massive. And I think for the first quarter, I think we're going to see, the coins with the best marketing plans outperforming the rest of the market. I think if more trouble shows up in the market, we're going to see a flight to quality. Right now, there's a lot of speculation. People are just kind of crowdsourcing their information, buying whatever coin, not knowing what they're doing. We'll see some flights to quality. And I think we're going to see more forks. So, we talk about Bitcoin fork. All these coins are forking and creating new coins. So we're going to see a lot more forks. And another big thing we're going to see is we're going to see a lot more regulation. So the US and all the other developed countries, they want to regulate the heck out of this thing. And so we're going to see a lot more regulation. Regulation on buying and selling, regulation on exchanging, regulation on reporting, all of that. And what that is going to do is going to create what I believe will be the two biggest sectors for 2018. And that is going to be privacy coins, Monero, PivX, Zencash, Dash, etc. And it's also going to the other sector, so privacy coins and decentralized exchanges. So right now, if you want to exchange your Bitcoin for any of the other coins, you have to go onto an exchange like Poloniex or Bittrex. You actually have to give them your coins. They hold them, they control them, and then you can exchange, right? If anything were to ever happen, if they were to go out of business, the government were to freeze them, they don't like you, they freeze your account, anything, they control your coins, you don't. And really, that centralized model of exchange goes against everything that Bitcoin and cryptocurrency stands for. The entire purpose of Bitcoin was to get out of the centralized banking model where they have the power to censor your transactions. And by having to use a centralized exchange, it's the exact same thing. Decentralized exchanges are the most important piece that we need to move into this decentralized, model. And so as we see more and more increased regulation, we're going to see the rise of decentralized exchanges. Now, BitShares is in our portfolio. I love it. I've told you guys from the beginning, it's one of my favorite plays, not because I believe it's going to be the most successful, but because it's the most important piece that we need. It had dropped down from I think 17 cents we bought in and dropped down to 5 cents, and I said, look, I'm doubling down. I believe in it, and it's rewarded us really, really well this year. So we're going to see mass scale adoption, and we're going to see that grow. Now, there's 3 areas that I think are going to be very, very instrumental in bringing just tens of trillions of dollars into this market. So I'm going to tell you those 3 trends. The first is that, if you're in the United States or in some of the developed nations like Europe or whatever, you don't really understand what's going on globally, or maybe you don't. We talk about like the internet companies and the New York Stock Exchange. Well, that's the New York Stock Exchange. That's in the United States. Japan has its own stock exchange. Europe has its own stock exchange. All these countries have their own stock exchanges. Well, cryptocurrencies are global. And so, a lot of times we look at things as Americans or Europeans, and we look at problems that we have, but our problems are different than the rest of the world. And so, I think that if you're in emerging markets, you feel this a lot more. But again, going back to history, we see how this plays out. So, banks want to control money. Governments want to control money. If they can control the money, it's power. But what happens is, in order for them to continue to grow or build out their empires, they need more money. So we can look at this like the Romans did, and they wanted to build the Roman Empire. And they had, their coin was pure silver. And they said, well, we need more money. So what they did is they made their coins 90% silver, which allowed them to create 10% more currency. And then it went to 80% silver, 70% silver, 50% silver, all the way down to 10% silver. They did that over 200 years. They devalued their currency 90%. We saw Napoleon in France do that to fight his wars, and the United States is doing the same. In 1933 they confiscated the gold, and then in 1970 they removed the dollar from being a gold-backed currency so they could inflate it away. And the Romans inflated their currency 90% over 200 years. We in the United States has done it in 40. So we devalued the currency 90% in 40 years. And so some people get that. And I believe that's one of the big driving factors for Bitcoin. And the media wants to tell you, nobody needs it. Oh, it's for funding terrorism. Oh, there's no value to it. But I think most people know there is. Most people know that their money is losing value every day. And some of the places where they're really seeing it is like right now, as I'm talking today, in Venezuela, their country is falling apart, right? They kicked in socialism and it's gone downhill really, really fast. They're seeing over 500% inflation. 500% inflation right now. And so, every day their money is worth less and less. They need twice as much to go buy the same goods that they needed yesterday. And so they're switching all their Venezuelan currency into Bitcoin. And as a matter of fact, they're paying a 35% premium because it's so hard to get there. Now in Zimbabwe, they have a 1,200% inflation going on today. 1,200%. They're paying an 85% premium to get into Bitcoin. I mean, it's just crazy. So those countries see it more than we do. They're impacted by it daily. But what's happening is these emerging markets are starting to move on to leaving their country's currency onto this. And once that starts happening, the whole world just goes along with it. Now, emerging markets have been interesting to watch. Like, for example, they'd never had wired telephones. They went straight to mobile phones. Right? They just skipped an entire technology cycle. And most of those people don't have access to banks. And now they're skipping over the banking cycle, and now they have mobile phones, so they're going right to cryptocurrencies. And just what we consider the emerging markets that are affected in this way, so not the US and Europe, I'm talking about emerging markets. They have cell phones, they don't have access to banks, and they're going straight to cryptocurrencies. That market is over $12 trillion. $12 trillion, and they're coming in super, super fast. So just from that alone, $12 trillion coming into a 700 billion market cap. The next thing we have the institutions. So I talked about the institutional money. Now, they've been sitting on the sidelines making 35% a year, watching everyone else make thousands. The reason why they've been on the sidelines is because the laws actually prevent them from being involved. So I don't know if you're aware, but like in the US, if you own like a liquor store or a grocery store, you're not allowed to buy wine, beer, liquor directly from the manufacturer. You have to buy it through a middleman. And investing laws are kind of the same way, where these institutional funds, they're not allowed to own the asset directly. They can't own gold. They can't own the stocks. They have to use a custodian account. And there are no custodian accounts for cryptocurrencies. So they can't even do it. Another thing is that cryptocurrencies are not considered securities by the SEC. And because they're not cryptocurrencies, then they can't, because they're not considered securities, they can't invest in them as well. So we are going to see that changing. The SEC is changing the laws, and they're going to be making these securities, and we're going to see these custodian accounts pop up. When that happens, it's going to be open and free reign, and these guys are going to come in super, super, super hard and fast. Also, I talked about in a previous video about a month ago how this new report came out and said that Bitcoin is not correlated to the traditional stock market. And so Wall Street loves that. They're always looking for uncorrelated assets to bring in together to help keep the volatility down. So we're going to see a massive, massive rush from these, what I call the institutional investors. How it will work is we'll see these We'll see the securities turn into securities. We're going to see the custodian accounts come online, and then we're going to start to see them tip their toe in the water. We'll see the first pension fund, endowment fund start to bring it in. Once they do, then everybody will rush in. And we know that because we've seen it do it over and over, right? We've seen it done with the bond market, the tech stock bubble we saw in the 2000s, with the real estate bubble, with the mortgage-backed securities. And so they're going to do the exact same thing. And I believe just that alone is over $70 trillion. Just that market, what I call the global stock market. $70 trillion is ready to start coming into this market. Obviously, 100% of it's not going to come in, but I believe 5 to 10 trillion could come in just from that. All right. Then the third thing that we have is after the institution comes in is then we have the public, right? Mass scale adoption. So once these securities, Wall Street's coming in, and we're going to have these ETFs, and right, ETFs, exchange traded funds. Those are things that you can invest in. So for example, if I want to invest in gold, I don't have to buy gold and keep it in my safe. I can just buy GLD, the gold ETF. All right, and that's what people do. They can do it through their Fidelity account, their E-Trade account, and that's how people invest. ETFs are massive, massive, massive. And so once that happens, it's kind of like the easy button, and it makes it easy. As you guys know, it's frustrating to buy cryptocurrencies, and so it's going to make it easy. And we're going to see this mass flood from the average public. And so the ETFs are going to be the biggest thing going this year. There's 6 that are about to launch right now, and that is just going to bring in a massive amount of money. I believe that it could potentially bring up to 10% of the stock market wealth right over. So that's another 10 trillion. So when you add up the emerging markets, the institutional investors, and the mass scale adoption, I mean, we're talking 20 to 30 trillion dollars getting ready to come into a 700 billion market cap. I mean, it's just crazy. So 2018 is going to be massive. We're going to see massive explosive growth. But I want you to keep in mind the 3 stages of adoption. And we know that a crash is going to come. We know that 90% of these companies are going to disappear because we understand history. So it's important to understand these 3 phases and understand where we are so we know when we can get out. And of course, we are studying this like a hawk. We have a ton of attention right onto the subject. Again, timing it or predicting the timing is very hard, but we know the signs that we're going to be looking for. So as we see these things happening, we know we'll be getting closer and closer and closer. And of course, we'll keep you up to date on that. So that is the massive update for 2017. That is my predictions for 2018. It's going to be, if again, my prediction is I believe that 2018 is going to be the most massive growth, the biggest hysteria, the biggest massive market growth that any market in the entire world has ever seen. I believe it's going to set every single record. I believe you're in early, you're going to make a bunch of money from that. And towards the end of the year, we need to start looking about, getting out. So stay tuned. Congratulations for being involved. That's the market update. And to your success, I'm out.